Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, June 19th at about 3:30 p.m. Eastern. And before we keep going, please know that all of us at ToniTurner.com wish all of you dads out there a very happy Father's Day. And now on to the market. The S&P 500 and the Dow gapped up this morning. Actually, the NASDAQ did too. Then it fell lower later today following Apple's move to temporarily shut some U.S. stores again after a spike in coronavirus cases rekindled fears of business disruptions as our economy emerges from lockdowns. The iPhone maker fell 0.5%. Excuse me, after saying it would shut stores again in Florida, Arizona, South Carolina, and North Carolina, states which have recently reported an uptick in the new COVID-19 infections. So on that note, let's move on to three charts that could give us some insight into the week to come. Our first chart today that we're going to look at is a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 index. Now, when I captured this chart today, the SPY was trading at $310.25. It's now 9% off its all-time closing high that was back here on February 19th at $338.34. Now that it's down here to $310.25, it is about 9% off of this all-time high. So we're back close to correction territory. As you all know, when an index or an asset is trading at 10% of its below its all-time high or lower, we say it is in correction territory. The good news here is the SPY today is at least still sitting on top of its 20-day moving average, coming in at 309.16. Above its the black line here, the 200-day moving average, which is coming in at 301 and change, and still above its 50-day moving average, the green line, which is coming in at $294.88. So we have all of this potential support here. Something I want to call your attention to, though, and I've seen quite a few of these patterns recently, albeit a lot of them a lot bigger and wider than this one. We could call this a pennant here, this pattern that's forming, but actually a pattern that very few traders even know about is called a diamond pattern. And if it ends up forming like this, at least right now, we don't know where this low is going to come in the next few days, but if this in fact is this little baby low here on top of the 20-day, this is called a diamond pattern. Now we're going to have to see how this plays out, but I can tell you that when diamond patterns are made at or near the high of an uptrend, they can tend to be, if they play out, they can tend to have a slightly negative connotation. So when we have this point coming out here up to a high, then down to a low, the point is here, the buyers moved it higher. Then when it fell, it continued to drop to a low here, a relative low. So we've got the high, that's the good news. We've got the low, that's the not so good news. Then it did rally again, and we'll have to see where this low here ends up being. But this, it kind of sort of looks like a diamond pattern is forming. And I just want you all to know that if it does come down here, there's a chance it could then that the SPY could continue lower. Now, of course, the 200-day moving average again is coming in here at 301.45. That's about 30.14 on the S&P 500. So we do have, of course, price support at about 300 or about 3,000 on the S&P 500 itself. So just a note, I wanted you to see that. Of course, we want the SPY to stay above the 50-day moving average, the green line at about 295 here. That's a line that we consider to be very important. It's kind of a medium trend line here. So hoping the SPY can stay above that 50-day moving average in the coming week. So please keep an eye on it, and if it does remain negative, please do check all of your protective stops. And now we'll go on to our next chart. This is a daily chart of the QQQ. As you all know, the Invesco QQQ represents the NASDAQ 100. That's a major index in our stock market, and the QQQ, its holdings are the top large cap growth stocks in the NASDAQ stock market. So we're talking about Amazon, Apple, Facebook, the usual suspects here, Intel, Microsoft, that whole group. And they have definitely led the market higher here. Certainly since March, the tech stocks have really ramped up. And the QQQ, ever since at the end of March, it jumped up over the 20-day moving average. It's been able to walk right up that line, walk right up that 20-day moving average until last week when it did drop down, and it fell below the 20-day moving average for 2 days in a row. So you can say, yeah, it is getting a little weaker, but it did manage to bounce back up. The buyers came in and bought the dip, and now it's back up to where it's trading today when I captured this chart at $244.63. Now the index is trading right at its newest all-time closing high, and that comes in on June 10th. That happened on June 10th at $246.22. So we look at that, we can see that price fell down here to right about 231 last week. Then it, again, as I said, it rallied back up. Now it's trading at 244, so very close to this prior high. If it can't get through it, if the QQQ for whatever reason next week begins to fall, and if it falls through the 20-day moving average and closes below it, and if it continues to fall, and we certainly hope it doesn't, and goes and closes below that 230 line, then we would see here a relatively shallow double top, but one nonetheless, and double tops are top reversal patterns. Then we might see another leg down. So just want to call this to your attention. Make sure next week, if you've got growth stocks, make sure you keep an eye on the QQQ and see if it can rally back up over and maybe even make another new high. But certainly we don't want it, excuse me, to fall below 230 or 231. So that's another reason to please firm up your protective stops. Our last chart for the day is the Invesco Wilder Hill Clean Energy ETF, symbol PBW. This is a daily chart. The PBW, and we've talked about this a couple of months ago, I believe, this has 41 holdings. This is an exchange-traded fund, obviously, with 41 holdings, and the top holdings are NEO, Tesla, Vivint Solar, Sunrun, and Sonova Energy and Ballard Power Systems. Now, this ETF made a relative closing high on February 20th, way back up here, at $44.75. Since then, it fell dramatically, like everything else did, and it dropped to $22.20 on March 18th, so it about got cut in half. Whoa. Then it rallied very, very quickly, pulled back again, and then started, and this is a higher low, so that turns it into, if it can keep going, it's in an uptrend, which it is. So now it's trading in this uptrend and actually walking up its 20-day, the red line, the 20-day moving average, which is a good thing. Now, it faltered too last week for sure. I kind of think that energy may be a place to look at, especially since people are going to be going on, I think, with the country opening, or not so much. Everybody certainly that I know wants to get outdoors, and I'm getting on the road at the end of July for sure for a few days. So just to get out of the house. So at any rate, I'm looking at clean energy here, and also it's kind of a good place to hang out in case the market starts down next week. Of course, you don't want to be foolish about it. If the market does begin to move down next week, sometimes the sidelines are the very best places to be. Okay, so back to our PBW here. Again, it did move down to these March lows. It rallied up and moved in an uptrend, walking up its 20-day moving average, and now is trading today as I speak at $38.78. So I'm going to keep an eye on the PBW in the beginning of next week. I'm going to see if it can move in a way that it stays above this 20-day moving average. It's above the 20-day, the 50-day, and the 200-day. If it can remain above this red line in the coming week, I may add a small position to my portfolio. I'm only adding small positions at this time. So I could get in here right around 38 and change as long as it's above 37.19, because 37.19 is where the 20-day moving average is right now. I will put an initial stop at $35 right here where you see this low where it came down here and then rallied back up. So I'm going to put my initial stop at $35.85. If you would like a tighter stop that makes sense, you could put it right below the 20-day moving average at $37. So I'm going to put my stop at $35.85. If you want it tighter, you can put it at $37 for PBW. So maybe you want to keep an eye on the PBW in the coming week. Now, this is not a day trading stock. This is a slow moving stock. And as long as it stays in an uptrend, I will probably be a buyer, although just scaling in little bits at a time here. If it falls below the 20-day, then for the moment I'm out. And now, before we go on to final thoughts, please know that we are offering a 20% discount on my popular online trader training, Trade the Trend to Profits. And actually, looking at this PBW, that could be one of the candidates for this particular strategy. If you want to discover an easy and powerful strategy to grow your portfolio, please check this offer out at the link on this screen, or simply click on the orange button below. Trade the Trend to Profits, a very easy and powerful strategy to grow your portfolio. And now on to our thoughts for the day. And our weekly question. Our weekly question this week is, what subtle shifts could I make in my trading routine that might yield positive results and a higher success level? What subtle shifts could I make? Now, we talked about making subtle shifts in our trading 2 weeks ago, and I have several subtle shifts to offer you that we can talk about in the weeks ahead. I made a couple of weeks ago that I hope you've tried by now. Subtle shifts. The adjective subtle means to make small. Subtle is small. It's not big and flashy. Subtle is something that's small and kind of quiet. Now, many times the smallest changes we make in our lives yield the biggest results. And I don't know if you found that to be true, but I certainly do. That's because small or subtle changes are easy to make, and they're easy to continue. They're not hard to do. That's versus big changes that can be uncomfortable or really difficult to achieve. So if we make one small change that leads to better results, we can then decide to make another small or subtle change that builds on the last one or supports it. And then from that, you can get a really big result. So when we're talking about trading here, here's a subtle shift you can make that may improve your trading day and your overall profits. Before you enter a trade, grade it. Grade it. An A trade means you have a high potential stock, and that could mean it has really good fundamentals, and you can check that out by just looking at the price to earnings ratio. Take 3 or 4 minutes to look at its fundamentals. So it has good fundamentals. It has a great setup. You know exactly where you're going to put your stop once you get in it. And the overall market is trending with your stock. So if you want a stock to buy it and it to go higher, hopefully you're trading in a bullish market. If you want to sell short and you want it to move lower, hopefully you're trading in a downtrending S&P 500. So an A trade, you've got everything in your corner for this particular trade. And if you say this trade is an A trade, then you may want to go ahead and get into it. However, is it a B trade? Is it the setups maybe not as good? Or maybe it's just sort of good? Or maybe you're chasing the stock. Maybe it's overbought. Maybe the stock isn't trading in sync with the market, and in certain instances it's very, very detrimental to your trade. If you're going in to go long and the market is going lower, a lot of times that can knock your stock out of a perfectly good uptrend and send it lower. So check out, is it a B trade? Is it kind of a good trade, but maybe not, maybe not? Or is it a C trade with a disorderly price pattern, and maybe you're only buying it because your dentist sister's attorney said it was a good company? Maybe that stock is a good buy and maybe it isn't. Bottom line here, if you grade your stocks A, B, or C, it helps you decide whether to go ahead with a trade as like in an A trade, or maybe reconsider it if you've designated it a B trade or a C trade. So bottom line here, when you take a moment or two to grade your trades before you enter, it forces you to think through that trade more, and that's a good thing. When you do that, you are making a subtle shift in your trading day that can improve your trading and even help you earn bigger profits, and that's why we do it, right? So until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.